Ladies and gentlemen, we're back again with another awesome video for you guys. I hope you're doing great. Okay, so like always, this is something very nice. I missed this particular trade, but I wanted to share with you guys. All right, so hang in there. If you're new to our channel, make sure you hit that like button, subscribe, and also make sure you turn on the notification button so that you don't get to miss any of our videos that you actually send. Okay, so this is what it is. So the market, as you can see here, we had the market in a short-term retracement, or you can call it a short-term uptrend, right? And then the market dropped. So what we want to see is the market giving us a high, low, a high like that. And so I'll start with this, labeling this level here as my higher high. This right here is my higher high, the highest high. Okay, this is my higher high here. Right here, this is my higher high, right? Okay, so if this is my higher high, then where is my QM? So you zoom in a little bit and you realize that there was actually a level here. See? Yeah, that one right there. So this right here is what we call a geo resistance. You guys remember the video I did yesterday, right? Yes, that video. If you've not seen it, make sure you go and check it out. Like, it explains everything that I'm talking about here. So this right here is my R1, and yeah, this right here is my R1, and this right here is my R2. Okay, that's my R2 right there. And then I have a low here. So this is the low and break of structure. So I have a low and break of structure. BOS is break of structure. Others like to use the other acronym, which is break of market structure, BMS. So whichever you're comfortable with, it's just okay. So you can see that's a very nice looking setup right there. And then the market went on to give us what? A lower low right here, a lower low. Okay, meaning our setup is complete. Therefore, we'll move to the next. That's the past. Now we look to the approach. How is the market coming to this level? You can see where my cursor is right now. You can see that the market acted as resistance here, resistance, and another resistance before the market was taken out, before that level was taken out. So right here, okay, right there, this is my resistance. So you can label this as double resistance. Let me just do this. So this is R1. This is R2 right here. Okay, this is R2, and then this is R3. Okay, that's my R3 there. Let me try and make this just look a little bit cleaner. Right? Yep, something like that. It's a pity I missed this particular trade. It met all my criteria, and it's unfortunate that this trade was missed. Okay, and then what did you have? We had the market coming to this level right there, here, and look at what happened. So the next thing is to actually look at this level. Well, look at where my higher high is right here. So your main issue here is to identify your order block. So right here is where I would expect the market to reverse from, around this level here. Okay, so this is my rally base drop supply zone. So this is my rally base drop supply zone. By the way, if you've not subscribed to our channel, this is your time to do that. Make sure you subscribed. Make sure that you like the video, turn on the notifications so that you get to be notified every time we drop a new video. So right there, then you just extend it to the right side and voila, look at that. And then the market is right there, and this is our rally based drop and checkout, right? And then remember this level, this is what we call a liquidity zone or a fake out zone. So different people call it differently. So call it whatever you're comfortable with, right? So this is my liquidity zone. I like to call it a liquidity zone. So this is level that has to be taken out before the market proceeds to where it's supposed to go. Right here, this level has to be taken out, and oftentimes we actually see this happening. Okay, I've seen this several times. So what usually happens here is that this level is taken out by a nice bullish, what we call a bullish Marubozu candle right there. So what we're going to expect is that this liquidity here, this void here, this cluster of stop losses right here will be taken out by a nice big candle, right, before the market drops down. So this is to take out the liquidity, and then we expect from here, we expect a nice big drop. Okay, something like this, and then this should be in red, right? Yeah, then this one is becomes a red candle like that, right? Like this. Okay, then it engulfs this nice very bullish Marubozu candle, and then you can see that the market dropped like that. Of course, it won't always be like this big. It will depends on how the market comes to that level, right? So you know that this is where our entry is. This is our entry right there. This is our entry right there, and our stop loss is always going to be above the higher high right there. That's our stop loss. So in this instance, our stop loss would have simply been how many pips? About 30 pips, and our target is around this level about 370, 340 pips, and the market has moved so far. It has moved over 100 pips, right? That's very nice. So our TP was going to be around this level. It's going to be around this level. Remember, we're looking at fresh demand zone. So this will be our TP around somewhere at that level there. And yeah, it's just the same setup I was explaining yesterday. Exact same setup. Yesterday I did a master class in very detailed tutorial for you guys. I hope you really enjoyed it. I've received some feedback, and I'm happy that you actually find this helpful. Uh, it's really nice to hear from you guys. This is actually very nice. So remember, always wait for this level to be taken out, right? Wait for that level where the market has been holding for some time as a resistance. Wait for it to be taken out, and usually this market will be taken out by a nice momentum candles. Okay, you expect some good momentum to take out the market, and then later on come to a level like this, our our order block right here, and then the market should be able to drop. Okay, and when you have something like that, that's very nice, and it becomes really nice. The thing I like about this is when the setup actually works out, it's the accuracy that's amazing. Yeah, like I love the accuracy once the market actually respects the structure. But then you also get to have cases where the market just goes through the roof, and you and I by this time must be able to understand that that's part of the game. That's what happens. Those are the expenses, right? So for you, in order for you to actually get that good winner, you have to endure the fakes, you need to endure those small losses and everything, and make sure that you always keeping your stop losses right at that particular point. Make sure that you're sticking to your risk management, because that's the most important part of trading, right? And remember, always remember that your risk management will actually have a huge impact on the trading psychology. Very, very important. So if you are putting up a position too much of the size, you're going to be fidgeting, you're going to be panicking. Why? Because you don't internalize and accept the risk. So that's very, very important. Make sure that you know exactly how much you're risking in this particular trade. Know how much your risk is, right? You always have to do that. So if you've reached at this end, thank you so much for watching, and please make sure that you subscribe, like the video, hit that bell notification, comment in the comment section, let me know what you'd like me to cover, and thank you so much for your support, and may God bless you. Until next time, goodbye.